You're listening to an African Elements top news story for April 5, 2025. Please visit our website at africanelements.org for more daily news. IMF approves 1.2b Egypt Reform Disbursement 2025 Egypt. IMF Disbursement Boosts Reforms by Darius Spearman, African Elements. Egypt recently secured significant financial support from the International Monetary Fund, IMF. The IMF's executive board completed its fourth review under the Extended Fund Facility, EFF, arrangement. This move unlocked an immediate disbursement of $1.2 billion for Egypt, finalized on March 10, 2025. This funding injection is crucial as the nation continues navigating complex economic reforms. Beyond the EFF funds, the IMF also approved a separate facility. This Resilience and Sustainability Facility, RSF, provides access to an additional $1.3 billion. Its purpose is specifically to bolster Egypt's efforts towards climate resilience and sustainable long-term growth. Consequently, these combined resources signal continued international confidence, albeit conditional, in Egypt's economic trajectory and reform agenda. Egypt's economy is showing signs of resilience, with growth projections looking brighter than expected. Gross domestic product, GDP growth, is now forecast at 4.7% for the 2025 to 2026 period. This figure surpasses the IMF's earlier, more cautious estimate of 4.1%. Several factors contribute to this improved outlook. Key drivers include government efforts toward fiscal consolidation and a moderation in inflation rates. Robust tourism revenue has also played a significant role, impressively maintained despite ongoing regional conflicts. This positive momentum is certainly encouraging for Egypt and potentially offers lessons for other African nations balancing growth with stability. A major pillar of Egypt's recent economic activity is massive investment in infrastructure. Over the last 10 years, the country has poured an estimated $550 billion into upgrading and expanding its foundational systems. These ambitious projects include the development of the new administrative capital and extensive high-speed rail networks, aiming to modernize the country and attract further investment. The construction sector itself is booming as a result. It currently boasts an annual growth rate of 7.4%. One of the most visible symbols of this drive is the new administrative capital, a colossal undertaking valued at $45 billion. Such large-scale projects significantly contribute to GDP growth and job creation, although questions often arise about long-term sustainability and debt implications. Alongside traditional infrastructure, Egypt is making strides in renewable energy. The nation has set a clear target: generate 42% of its electricity from renewable sources by the year 2030. This commitment reflects a growing global trend and positions Egypt as a potential leader in green energy within the region. Concrete projects back this ambition. The massive Benbon solar park, with a capacity of 1,600 MW, stands as a prime example of Egypt's renewable energy investments. Therefore, pursuing renewable energy not only addresses climate change concerns, but also offers economic benefits through energy diversification and potentially lower long-term energy costs. While progress is evident in some areas, Egypt's structural reform agenda faces mixed results. The IMF has highlighted certain challenges that remain critical hurdles. Specifically, delays in the state's divestment program are a concern. Creating a truly level playing field between state-owned enterprises and the private sector also continues to be a difficult task. However, positive steps have been taken. Recent reforms include modernizing the tax system, which can improve government revenue collection and efficiency. Additionally, reforms aimed at strengthening the competition authority and conducting governance assessments of state-owned banks demonstrate a commitment to improving the business environment. On the fiscal front, Egypt has demonstrated strong control. The country achieved a primary surplus, government revenue minus non-interest spending, of 6% of GDP in the fiscal year 2024. This significant surplus indicates disciplined government spending and revenue management, a positive sign for creditors and international partners like the IMF. Despite this fiscal achievement, a high public debt burden remains a considerable challenge. The government is actively implementing debt management strategies to mitigate risks. One key goal is to extend the average maturity of its debt portfolio to 4.5 years by the fiscal year 2026. Consequently, lengthening debt maturities reduces near-term rollover risks and provides more breathing room for the government's finances. Egypt is actively seeking to strengthen its global economic ties. The country aims for a 15% increase in foreign direct investment, FDI, for the 2024-2025 period. Officials hope to leverage Egypt's strategic geographic location connecting Africa, Asia, and Europe, along with its relatively large and skilled workforce, to attract international capital. The digital economy is another key focus area. The Digital Egypt strategy is designed to significantly boost the nation's technology sector. Encouragingly, this sector has already demonstrated strong performance, growing 16.8% year-on-year, fueled by expansion in e-payments and financial technology, fintech. Success in attracting FDI and growing the digital economy could create new opportunities, enhance competitiveness, and further integrate Egypt into the global marketplace. Copyright African Elements.